Hey guys, so I want to talk about an HSA today, and an HSA is a very tax advantage account. It's akin to a Roth IRA where the assets inside the HSA, if done properly, can grow in investments tax deferred and ultimately tax free if used for medical expenses when taken out. An HSA is triple tax advantage in that sense where you get the deduction on the backside, it grows tax deferred and obviously tax-free over your life. And as you put the money in, you get a deduction in the year you put the money in. So it's triple tax advantage. It's a powerful account. It's something every single person should be doing. A couple $1,000s a year for an individual, and you double that for your spouse if you have one, married, filing jointly, etc. So one of the most powerful accounts you can do. Now, the caveat is you need to have a high deductible insurance plan. And a lot of people do have that. Some go towards the FSA, the flexible spending account versus the HSA. So there's some nuances there. But if you have the capacity to donate. If you put money into your HSA account and you have a high deductible plan, I think everyone should be doing it. And it's one of the most tax advantage accounts you can do for yourself. Now, some of the interesting parts about the HSA are that you can accrue the medical expenses in a file somewhere. Now, you need to have proof of this if ever audited, but let's say you have health insurance premiums and eyeglasses and contacts, etc., that you accrue over time and maybe just say every year. Well, you could take the money out of your HSA and use that to pay for these expenses because it is a eligible HSA expense. And I should note the IRS does have an entire list of expenses, and some will surprise you. I think I even saw that Pedialyte is one, to give you perspective on how easy this is to use. But the better way to do this is keep record of all the expenses that you do and put it away somewhere, and you keep accruing money into the HSA and investing it, and it's going to grow and grow and grow and grow. And I've seen people that have hundreds of thousands of dollars in these accounts, and you don't need long-term care insurance anymore. And you can defer all those expenses, and if you need the money in the end, you can take the money out and basically call on all the receipts that you've had saved over the last 10 years, 20 years, 30 years, whatever. So it's just so powerful of a combination, and it's just these little things you can do to create some wealth. And when you think about a long-term care premium in the end, and other insurance expenses and healthcare expenses when you get older, if you have hundreds of thousands of dollars in an HSA protecting you, that changes the trajectory of your retirement. You may be able to retire a couple of years early, you can have a better quality of life, or you can take some chances that you didn't think you could by deferring long-term care payments or whatever. So there's a ton of nuances in there, a lot of different things, and I'm sure that there's a lot of different advice and opinions. But regardless, the HSA is one of the most powerful tax advantage accounts you can do. You get a tax deduction on the way in, you get tax deferred growth along the way, and if you take it out for medical expenses in the end, you get that all tax free. So triple tax advantage is one of the best things you can do.